How much money do you need in order to purchase a house? It's probably one of the questions I get asked the most. And when I ask my clients and my friends how much they think that they need, the answers range anywhere from 50% to 0%. So I thought I'd hop on today and kind of clarify exactly how much money you need down in order to purchase a house. In other words, what are my closing costs? Well, most people are aware of the big one, the main closing cost, which is a down payment. Gone are the days of getting 100% financing, so you will need to put money down in order to buy a house. But how much do you need to put down? Well, it depends. You'll hear some people say 20%, you'll hear some people say 5%, and they're both correct. 20% is for what we call a conventional mortgage. That was the traditional mortgage, and it was very attainable back when houses were $80,000. Now that our average price has climbed towards $500,000, to expect everybody, especially first-time home buyers, to be able to provide 20% down is just not realistic. So what the government and the banks came out with is what they called a high ratio mortgage. High ratio mortgages are what I see on probably 95% of the trades that I do, and they are typically 5% down. Now, if you choose to only put 5% down, then you're going to be responsible to pay what is called mortgage default insurance. Mortgage default insurance is an insurance policy that you are going to pay for that protects the bank in the event that you default on your mortgage. So basically, what the bank is saying is, we're only comfortable lending them 80%. And then the government is saying, well, if we sell them insurance to protect them on a default, would you consider lending 95% to them? Now, mortgage default insurance typically ranges somewhere around 4% of your loan amount. Not 4% of the purchase price, 4% of the loan amount. Now, if you put 20% down, you can forego mortgage default insurance entirely. So you're saving 4% of your loan amount. Now, that 4% mortgage default insurance, that's not payable upfront. That gets built into your mortgage and it is amortized over the length of your mortgage, typically 25 years. Okay, next, you have provincial deed transfer tax. The provincial deed transfer tax in Nova Scotia is paid for by the buyer of any property, and it is 1.5% of the sale price. This amount is actually due on closing. So before you get the keys, you have to pay this. So right away, we're at a 5% minimum down payment as well as a 1.5% deed transfer tax. But that's not it. Next, you need to think about a lawyer. And yes, you do need to have a lawyer. You don't need to have a real estate agent in order to buy or sell real estate in the province of Nova Scotia, but you do need to have a lawyer. Somebody needs to be available to register the deed. And typical attorney costs are roughly $1,000. Now, it depends on what firm you go to and how well established your lawyer is, but let's just say, typically speaking, it's about $1,000. Next, and this is the most surprising one for most people, are inspections. And when I say inspections, people typically think a home inspection, but that's just one of the many inspections that you do. If you're buying a house that's on municipal services, meaning that the city brings you your water and takes away your crap, then you'll likely want to have a home inspection as well as a sewer line inspection. Home inspection's obvious, they go through, check the house to make sure there's no major defects. The sewer line inspection makes sure that the line going from the front of the house out to the street is not compromised in any way. But there are other things you may want to get tested, such as radon. Some people still test basements for radon to make sure they can remediate it and make sure there's not high levels if they plan on spending a lot of time down there. Say you're buying a house that has basement bedrooms, right? If you're going to be spending 8 hours a night down in the basement, you probably want to get it checked to make sure that there's not radon there. Now, if your basement's just a rec room that you're going to be spending 3, 4, 5 hours in a week, you might opt not to get that inspected. But the one inspection item that catches the most people off guard are people that are buying houses that are on well and septic. Because although they'll probably still want a home inspection, they're also gonna want a septic inspection, a flow test to make sure that there is enough water being produced by the well, as well as a water quality test to make sure that the water is drinkable. Home inspections, about $500. Radon inspections, normally done by the home inspector, for an additional $250. Sewer lines, $300 to $400. And then septic and well combined can add up to be $800 to $1,000. So if you're somebody who's buying a house on well and septic and you feel the need to get every inspection done, you're probably gonna be into it for close to $1,800 to $2,000. So to wrap this up, there are more to your closing costs than just your down payment. As a general rule of thumb, I always tell people to estimate 7.5 to 8%. If you have 7.5 to 8% tucked away, you shouldn't have any issues buying a house, and you won't feel the need to potentially pass on a certain inspection that you maybe shouldn't have in order to save a little bit of money. Thanks so much for checking out this video. I hope you found it informative. Please like, comment, subscribe, all the good stuff. I really appreciate it, as it helps me kind of keep my drive to keep these videos going. Thanks again for watching, and we'll see you on the next one.